Hello friends, welcome to my channel. Good morning, good afternoon, and good evening for whatever time you're watching this video. So I'm back again with a new video, and this time's topic is Bollinger Band trading method. So let us understand how to trade Bollinger Bands, and before we get started, let us also know a little bit about Bollinger Band and who is the person who's created this. So let's get started. Okay, Bollinger Bands are created by John Bollinger. Okay, there are three lines that compose Bollinger Bands: a simple moving average, which is the middle band you can see, and an upper and a lower band. The upper and lower bands are typically two standard deviation plus or minus away. So that means you're taking a 20 period simple moving average and you're drawing a standard deviation and making an upper band and a lower band. So this acts as a boundary for both price, because the price has moved in this range for last 20 days. That's how it is giving a picture as a support and resistance. You can consider the upper Bollinger Band as a resistance and the bottom Bollinger Band as a support. So now what is the settings we are going to use? We are going to use 10 and 1.5 or 2 for better results. Usually when you put in the Bollinger Band on any trading terminal, the standard settings come as 20 and 2. So for getting quicker results, we use 10, 1.5 or 10 2. You can also use the standard one. Both all works the same, but you get a little bit of delay in terms of taking an entry. Other indicators which are actually to be used with Bollinger Bands are MACD or RSI. RSI works very well to get an additional confirmation, because it'll give you a clear picture on the breakout which will happen on the Bollinger Bands. Okay, so now let's get onto the charts to have a little bit of experience on what exactly I'm talking about. So I'll take you to my Sharekhan terminal. Here I have a 10-minute chart of Bank Nifty, and Bollinger Bands always move in two patterns. One is the squeeze and the second is the expansion. So I'll put a tool here so that I can show you a squeeze. So this is a squeeze, right? And there is an expansion. So it moves in that fashion. It's a squeeze and then it expands. Okay, so now what I'm trying to say, and how do we trade this? Let us understand that. So see, this is a 10-minute chart, as you can see here. So in this, whenever the price closes above this candle, let me put a tool here. It will be better if I use the pencil. Okay. So when the candle closes above the upper band, this gives an indication that it is a short entry. Okay, so you have to short on this candle and your stop loss will be here. And whenever you see a candle closing below the bar, the next candle you can buy. So your buy entry, and this will be your stop loss. So this is how you can trade Bollinger Bands, and there are certain rules which are to be followed, which I'm going to cover. So this works well on 10 minutes and 15 minutes. If you go to shorter time frames, usually there will be multiple entries, but it's better to trade on a 10-minute higher time frame. See, you can also notice here the Bollinger Band uh, closed here. Closed. Okay guys, so I've removed all the tools, so let's start from the beginning and try to keep Bollinger Bands so that people who are not aware can learn from this. So we go to add study and then add Bollinger Bands. Average type is simple. We use simple, then we make it 10 and we make the standard deviation as 1.5 and apply. Okay, so this is your Bollinger Band on 3-minute chart. Okay, even 3-minute chart also gives you a lot of entries like short entry, short entry, short entry, short entry, short entry, short. Okay, let's look at 10 minutes. So you can see if there is a strong trend, the market will bounce to the median and then come back, bounce to the median and then come back, bounce to the median and come back, and then this is a reversal candle which happened. So let us see what rules we have to follow to understand the actual breakout. So there is a breakout system in Bollinger Bands which you can identify, which you will not be able to find it anywhere on any of the YouTube videos, which I'm going to share with you now. So Bollinger, as I said, Bollinger Band moves in two phases. One is contraction and then there is expansion. So after the contraction and then how do you identify whether uh, this is a breakout or it's a reversal? So usually our condition is that when the candle closes above the upper Bollinger Band, we tend to short, right? We tend to short here. But in this case, it has closed above, but it has rallied up. So how do we identify these kind of setups? So you need to watch this very carefully. I'll pick up a better example. Okay. So if you go to 5 minutes, yeah, so this will be better for explanation. Okay, so this is what you need to look at. See, whenever the price is actually closing above the upper Bollinger Band, you need to uh, look at this, the lower Bollinger Band. So if you see when the price is breaking out, this band will turn upside and this band has to turn downside. Okay, so they both will like repel from each other whenever there is a strong breakout. You have to watch this because the candle will be forming and it will be like this, right? You can see that this is going up and this is going down, so you have to watch for that. You have to see this direction. If you get to see this direction before, you can immediately change your stance and put a buy position and put a stop loss here, and you will be able to capture the breakout. In other scenarios, if there is no breakout happening, if it is a reversal, I'll show you some pattern. See, here there was a reversal. So here the candle went like this, but even this turned upwards. It didn't go in the other way. So whenever there is a breakout happening, the upper Bollinger Band will go up, the lower Bollinger Band will go down. So this will confirm the breakout of the price. So you have to keep this in mind, and if there is no divergence happening between both the upper and lower Bollinger Band, you can definitely go and short and keep your stop loss here. Okay, you can look at various examples like this. Like, see, this candle closed below the lower Bollinger Band. Next candle you can buy, keep the stop loss here, and then see, beautiful rally. You exit here. You can short here, again exit here. There's one more entry. It came here, exit, short. In this short, there was a divergence. You can see this turned this side and this turned that side. So there was a divergence which happened, and this led to a great breakout downside. And after that, the price reversed, went up. So I hope this explanation, you can understand and try it a fewer times to get a grip. So I'll take you to the rules page now. I'll take you to my presentation back where you can understand what are the rules we need to follow. So rules to be followed is that the candle should close above upper Bollinger Band for short entry and vice versa for long entry, which I've explained. Stop loss above or below the candle which closed above or below the bands. So you need to take an entry on the next candle and always place your stop loss above if you're shorting and stop loss below if you're taking a long entry. And watch the curve of the Bollinger Band to identify the breakout, which I just explained to you that you need to look at the upper Bollinger Band and lower Bollinger Band when the price is closing above the upper or lower Bollinger Band. You need to see if the Bollinger Bands are going away from each other, then there is a possible breakout which is going to happen. In that scenario, you have to change to the side which is going to break out and then go long or then go short. So breakout usually occurs after a squeeze. So always keep this also in mind that there has to be a substantial squeeze before the breakout. And I explained Bollinger Bands move in squeeze and expansion mode always. Sideways market, Bollinger Bands touches both the sides. So you can easily play. Bollinger Bands work beautifully in sideways market. You can actually sell above, buy below, sell above, buy below, and you can make good money and get multiple entries. And consider the bands as upper band as resistance and lower band as support, and add RSI for better results to understand if RSI, if it is above 60 or above 80, then it is oversold, and if it is below 20 in RSI, then it is overbought. Oversold and overbought conditions you have to play along with the Bollinger Band technique. Now, going to the next topic, which is the most crucial topic and most important topic for any trader to make a living in the market, and that topic is risk management. So, I'm going to take you to the position sizing and risk management. So, I'll take you to Excel where I can show you a simple Excel. So, I've made this Excel for you. Here, we are talking about position sizing. So what exactly I'm trying to say is that if you have a cash in account of like 5 lakhs as an example, okay, and your risk taking capacity or appetite, I can say, is only 1%. This can vary from individual to individual because somebody can have 1%, somebody can have 2%, some people can go up to 5% as well, depends upon their appetite to take the risk. So my suggestion, I always use 1%. So if you take 1% risk percentage, and your value for that 1% on this 5 lakh will be 5,000. So I'm talking about in Indian rupees, so it will be 5,000. If your entry price, the price on which you're taking an entry as an example is like 150, and you have identified your stop loss, which will be like the candle of Bollinger Band, which is the top of the candle, which is like 155 or 154. Assume that it is 155. Then what is your difference? Your difference is 5 rupees. So the 5 rupees is the quantity quality difference between both the price and the stop loss. So how much quantity you can trade with that 5 rupees? Now there is a simple formula. What is the quantity you can trade is that you can simply divide your risk value, which is 5,000 as per your rule of 1%, and the stop loss. So this is the quantity, which is the 1,000 quantity is what you have to trade. So if you trade with 1,000 quantity, what will happen if your stop loss gets hit? If your stop loss gets hit even 10 times, it will be always 1,000, it will be 5,000, 5,000, 5,000. So you're capping your risk here, and your gains can be up to 12,000, 15,000, 10,000, and like 8,000. So this is how you have to manage. And the graph, if I have to show you a bar chart, mm, it will be something like this, where your risk is always capped at the same 5,000, and your okay. So I hope you understand this point, that we have to cap our risk always to sustain in the market, and only then your profits will be visible. Otherwise, if you don't have a cap like this, your graph will swing both the sides, upside and downside, which is not good. You should always maintain a steady graph on the lower side, and your graph can vary on the profit side, that is fine. But so this will safeguard your capital, and this is the most important thing which you need to follow. In position sizing is important in any derivative or option or stock, whichever thing you are trading, even in commodity. This kind of risk management and position sizing should be done before taking the trade. Do not go and blindly take the trade, without having these calculations in plan. You should have a plan like this before you enter into any trade. So that's how we need to do our position sizing. And if you have to sustain for longer period of time in the market, you have to always look for managing the risk. The first thing you should learn is risk management, and then only you can become a successful trader. So that's it for my side in this video. If you have any doubts, and if you have any queries, please do comment, and let me know if I can help you in answering those questions. And you can also subscribe to my channel and follow me on Twitter. And if you're willing to open up a discounted brokerage, please do leave your details in the comments so that I can get back to you. So thank you. Please subscribe to the channel, and every week you'll find a new topic and a new video. I'll try to keep the videos shorter so that you can understand better, and I'll try to capture everything in the presentation so that you can read through. Thank you so much for watching, guys, and have a great day.